Good day Forex trader. Your USD Forex signal, range-bound for now. There is a likelihood that the pair will remain in this range ahead of the US retail sales numbers and the Fed interest rate decision. Bullish view. Buy the Euro USD and set a take profit at 1.1400. Add a stop loss at 1.1250. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1300 and a take profit at 1.1250. Add a stop loss at 1.1350. The Euro USD held steady on Monday morning as the market reflected on the relatively strong US inflation data. Investors are also preparing for what promises to be one of the most important weeks in the market this year as the Fed and the ECB publishes their decisions. It is trading at 1.1318, which is slightly above last Friday's low of 1.1265. The Euro USD rose after the Bureau of Labor Statistics published strong inflation numbers on Friday. The data revealed that the headline inflation rose from 6.2% in October to 6.8% in November. This was the biggest increase in more than 50 years. The core inflation that excludes volatile food and energy prices rose to 4.9%. These numbers were important since they seem to have invalidated the Federal Reserve's claim that the current inflation pace was transitory. Also, they are notable because the U.S. labor market is tightening. In the other week, data by the BLS showed that the country's unemployment rate declined to a low of 4.2%. This was the lowest level since the pandemic started. Therefore, the focus shifts to the upcoming Federal Reserve interest rate decision that is scheduled for later this week. Based on a previous statement by the Federal Reserve Chair, most analysts expect that the bank will tighten more. It will do this by reducing the size of its asset purchases and possibly hinting that interest rates hikes will start in the coming year. Former Treasury Secretary, Larry Summers has called for the Fed to signal 4 rate hikes. The Euro USD will also react to the upcoming US retail sales numbers that will come out on Tuesday. The next key catalyst to watch will be the European Central Bank, ECB, decision that is scheduled for Thursday. Euro USD Forecast. The Euro USD pair was little changed on Monday morning as investors waited for key events. It is trading at 1.1318, which is slightly above the 25-day and 50-day exponential moving averages, EMA. The price is also slightly above the 23.6% Fibonacci retracement level. It has also formed a symmetrical triangle pattern. This pattern has a few days to go before it reaches its confluence zone. Therefore, there is a likelihood that the pair will remain in this range ahead of the US retail sales numbers and the Fed interest rate decision. GBPUSD Forex signal, pound to hold steady ahead of UK data. The pair will likely keep rising as bulls target the 38.2% retracement level at 1.3420. Bullish view. Buy the GBPUSD and set a take profit at 1.3420. Add a stop loss at 1.3200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3235 and set a take profit at 1.3150. Add a stop loss at 1.3325. The GBP/USD pair held steady on Monday morning as the market refocused on a relatively busy week. The pair is trading at 1.3265, which is about 0.8% above the lowest level last week. Key data and central banks ahead. The GBP/USD pair is relatively unchanged ahead of a relatively busy week for the sterling and the US dollar. On Tuesday, the UK will publish the latest jobs numbers. Economists expect the data to show that the unemployment rate declined from 4.3% to 4.2% in October. This number will be in par with that of the United States. On the same day, the US will release the latest Producer Price Index, PPI, data. Economists expect the numbers to show that the country's factory-gate inflation rose from 8.6% to 9.2% in November. This is notable since the US published strong consumer inflation numbers on Friday. The data revealed that the country's headline CPI rose to a multi-decade high of 6.8%. The UK jobs numbers will then be followed by the country's inflation figures that will come out on Wednesday. Economists expect that the headline CPI rose from 4.2% in October to 4.7%. They also expect the core CPI rose from 3.4% to 3.8%. The biggest catalyst for the GBPUSD pair will be the Fed and Bank of England, BOE, interest rate decisions that will come out on Wednesday and Thursday, respectively. These will be their most important decisions this year. The Fed is expected to sound a bit hawkish thanks to the strong US inflation and retail sales numbers. As such, the bank will likely signal that quantitative easing, QE, will end in the first quarter of the year. Also, they expect that the bank will signal that it will hike interest rates in 2022. The BOE, on the other hand, could sound dovish because of the Omicron variant. GBPUSD Forecast. The GBPUSD pair has bounced back after it declined to a multi-month low of 1.3160. It has moved slightly above the 25-day and 50-day EMA. It is also at the upper side of the Bollinger Bands while the price is slightly below the 23.6% Fibonacci retracement level. The price is also slightly above the standard pivot point. Therefore, the pair will likely keep rising as bulls target the 38.2% retracement level at 1.3420. On the flip side, a drop below 1.3220 will invalidate the bullish view. AUDUSD Forex signal, bullish breakout to 0.7275 possible. The pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 0.7270. Bullish view. Set a buy stop at 0.7190 and a take profit at 0.7275. Add a stop loss at 0.7130. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7130 and a take profit at 0.7050. Add a stop loss at 0.7200. The AUD-USD pair is hovering near its highest level in 2 weeks as investors focus on the upcoming US retail sales data and the Federal Reserve decision. The pair is trading at 0.7173, which is about 2.6% above the lowest level this month. The AUD-USD pair rose last week after the latest interest rate decision by the Reserve Bank of Australia, RBA. The bank left interest rates unchanged and signaled that it will be patient when it comes to rate hikes. It also decided to continue with its quantitative easing policy. The pair also rose after the strong US inflation numbers that were published on Friday. The data revealed that the overall inflation rose to 6.8% in November as energy prices rose and supply chain disruptions remained. Excluding energy and food prices, inflation rose to almost 5%. Therefore, focus now shifts to the upcoming US retail sales numbers scheduled for Tuesday and the latest interest rate decision by the Federal Reserve. Economists polled by Reuters expect the data to show that the headline CPI declined from 1.7% in October to about 0.8% in November. Excluding food and energy, the sales are expected to have fallen from 1.7% to 1%. The key mover for the AUD-USD pair will be FOMC decision. Based on the recent numbers, economists expect that the bank will sound a bit hawkish in a bid to control inflation. It will do this by continuing the process that started last month when it started to taper its asset purchases. In the last meeting, the bank decided to slash the size of its quantitative easing, QE, by $15 billion. The Fed will also likely hint that interest rates will rise at a faster pace. AUD-USD Forecast. The AUD-USD pair has held steady in the past few days. It has managed to move close to the 38.2% Fibonacci retracement level. Also, the pair has managed to move above the 25-day and 50-day moving average. The current level is important since the pair failed to move above it on Thursday. It has also formed a small inverted head and shoulders pattern. Therefore, the pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 0.7270. A drop below the chin of the double top pattern at 0.7135 will invalidate the bullish view.